needs to improve regulations in its oil and gas sector if it is to have any hope in improving investments.
Okay, looking at Nigeria's OPEC quota, which is currently at 1.8 million barrels per day, how will Nigeria convince OPEC, to allow for this spike in production? Or is this possible, or will Nigeria possibly have to quit OPEC?
Okay, so after the shale output drastically improved in 2014, it was necessary, and global oil prices dropped significantly. It was necessary for OPEC to come to the rescue of member countries and cap their production. And for Nigeria and Libya, it gave us a quota. They gave us a quota, and our quota is, as you said, is about 1.8 million barrels per day. However, with our target of extending this to 4 million barrels per day by 2020, if we stick to this target, and if the speculations are right about OPEC extending this quota beyond 2018, and we want to stick to our target of 4 million barrels per day, it could imply that we want to cut out from OPEC, and this would have drastic ripple effects on other countries. Other leaders of other oil-producing leaders like Saudi Arabia, may cut out too, and this would be basically a lose-lose for everybody, because you would see that oil prices would drop again, and there's hardly anything OPEC can do to come to our rescue.
Research analyst at the financial derivatives company, Mr. Olubile. Well, thanks for coming on the program.
Thank you for having me.
And talking about oil prices now, they remain firm at the international market today, with Brent still trading above $70 per barrel, supported by concerns that tensions in the Middle East could lead to supply disruptions. Brent crude futures were at $70.17 per barrel, and that was up 0.1%, while U.S. crude traded at $65.63 a barrel in early trade. Crude also received support from OPEC members, as Saudi Arabia and Russia both reiterated goals to extend the production cut agreement. Meanwhile, Iraq, the second biggest producer within the Organization of the Petroleum Exporting Countries, has also shown support to the cartel's agreement to cut oil output. And gold prices are higher for a third consecutive session today, as investors eyed rising tensions between Russia and the West, even as a U.S.-China trade spat appeared to ease. Spot gold edged up 0.1% to $1,354.51 an ounce, just off Monday's 5-week high of $1,355.97. U.S. gold futures for April delivery were flat at $1,354.60 per ounce. Analysts see the yellow metal being supported by last week's statement from the U.S. Federal Reserve, which forecasts at least 2 more hikes for 2018 instead of the 3 that many had expected. In other precious metals, spot silver gained 0.6% to $16.75 per ounce, and platinum was up 0.5% at $957 an ounce. Away from those numbers now, Standard & Poor's is expected to publish its next rating review of South Africa on May the 25th, but ahead of the review, the global ratings firm is forecasting a GDP growth of 2% in 2018. This is up from 1% previously. S&P also sees a growth of 2.1% in 2019, up from a prior forecast of 1.7%. South Africa's Finance Minister, Landa Nene, believes S&P is likely to look at his country in a positive light, but the agency advises a stronger per capita economic growth for South Africa before its credit rating can be upgraded. Other factors that could contribute to an upgrade in the country's rating include faster debt stabilization than currently planned. S&P downgraded South African debt to junk last year, citing a deterioration in the economic outlook and public finances. Meanwhile, South Africa's anti-corruption agency is investigating a $60 million government contract with German software firm SAP. The country's public protector claims to have received an anonymous letter alleging due process was not followed in the award of a contract to SAP in 2016 to provide it and support services to the Department of Water and Sanitation. This investigation comes at a time Parliament prepares to investigate mismanagement at the DWS. SAP is yet to comment on the agency's inquiry or give details about the contract, but says it's conducting a review of all its deals with the South African government back to 2010. The public protector has carried out several influential investigations, including one in 2014 that was instrumental in making former President Jacob Zuma repay more than $600,000 of state-funded security upgrades to his private home. And in Ghana, the central bank has cut its benchmark interest rate by 200 basis points to 18%. The central bank governor, Ernest Edison, told journalists in the country's capital, Accra, that its medium-term inflation target is still on course. Ghana is in its final year of a $918 million credit deal with the International Monetary Fund to narrow deficit, debt, and inflation. Cocoa prices may have surged by a third this year, but analysts fear that farmers in the top producer, Ivory Coast, may not see big gains yet. Now, that's because the country uses forward sales to determine the minimum farmer price, and so recent gains may have come too late for the smaller of the two annual harvests that starts next week. This is likely to limit President Alassane Ouattara's ability to boost farmers' sales. Ivory Coast's cocoa sector is also recovering from a crisis last season when plunging prices led exporters to a default and thousands of tons of contracts, pushing prices even lower and costing the nation more than $500 million in support payments. Well, still to come on the program, the conversations continue at the 6th edition of the Africa CEO Forum, but this time with a look at the new intra-Africa trade agreement. Well, that's in a moment. Please stay with us.